Good morning and welcome to Africa Amplified, Bloomberg's monthly show bringing Africa's stories to the world. I'm Jennifer Zabasanja in Johannesburg. Thanks so much for joining us. So in this episode, we're going to take a look at the business of sports and how it's playing into the economic challenges and opportunities facing the continent as many countries look to boost their global reputation and also attract investors. If you didn't know this, sports contribute 2 to 3% of global GDP. That's according to the OECD, with 90% of the wealth generated in the West and Asia. Africa, of course, provides a number of talents to these markets, but sport represents just 0.5% of the continent's GDP. So the African sports industry has a ways to catch up. Soccer, or football for many of you lovers, have been closely following the African Cup of Nations hosted this year in the Ivory Coast. The spectacle, which occurs every 2 years, not only showcases the best players and teams making up the continent's most popular sport, but also provides an opportunity to attract attention to the host nation and its ability to successfully pull off a global event. Coming up, we're going to hear from one of the top African global sports executives and his quest to boost investments and infrastructure into the sector across the continent. We'll also dig into the IMF's outlook for Africa and some of its lingering headwinds holding the region back from full potential. But first, let's dive into the stories and issues on the agenda that are affecting the markets today with our reporters from across the continent. We're going to take you to Lagos in the west and Kigali in the east. But first, let's start here in Johannesburg with Bloomberg's Colleen Goko-Petzer. So, Colleen, thank you so much for being here, as are all of you reporters. So, nations perceived as riskier by global lenders have been returning to Eurobond markets in the past few weeks, including, of course, the Ivory Coast, which is was a bit of a surprise to the team here. Can you just walk us through the significance of what we saw from the Ivory Coast?
Of course. Thank you, Jen, for having me. The Ivory Coast was the prime candidate to return to Eurobond markets. It's got a strong relationship with investors. It's got a strong reform, good growth trajectory. So there are a lot of things that investors liked about the Ivory Coast. It's also been very prudent in terms of what kind of financing it's been drawing from. Hasn't been relying entirely on the Eurobonds. Its last dollar issue was actually in 2017. And the last one before, the one just after that was a euro-denominated bond in 2020. So it has a lot of scarcity value and obviously the backing of its credibility of the government and how it's handled its finances all along. So you could say Ivory Coast was the gold standard. Whether other African issuers have that going for them right now, they don't. They'll probably wait until the Fed begins to start cutting interest rates before they start coming back to the market.
Well, so then, Colleen, just take us through that, because it's interesting to see this happening, and many people were asking, is Ivory Coast an outlier, or could this potentially be a start of others? But you're saying we may not see anything until the Fed really starts cutting interest rates?
We will see potentially one or two before the Fed, but those will probably be have-to situations. And I'll put like Kenya on top of that list. They have a Eurobond coming due in June 2024, and it's been an issue of contention for investors just as to how they're going to address it. They haven't been very clear about what exactly they're going to do, so investors are very curious to see what happens there. What they will do probably is potentially come to the market, but it won't be ideal. Yields on that 2024 bond are still in double digits, which will mean it'll be expensive, and they probably won't be able to get the amount that they would have initially wanted.
So who else then are you and the team paying attention to in the region?
There's South Africa. They had a bond mature earlier this year, but there has been talk that they may potentially return again, depending on what happens in the general elections, and obviously depending on market conditions. And there are also some other issuers on the continent who have Eurobonds coming due this year, which include Gabon and Senegal. They may potentially return as well. Probably unlikely Gabon, but potentially Senegal. They have a lot going on for them as well.
And we know you're all over that. Colleen is our Bloomberg emerging markets reporter, Colleen Goko-Petzer. Thank you so much, Colleen, for being here. So to Kenya now, where the courts have dealt President William Ruto's flagship projects a fresh blow. That's after they ruled against a mandatory levy to fund affordable housing programs. And in a separate judgment, the High Court thwarted government plans to deploy police to Haiti. Let's get to our East Africa correspondent, Ondiro Oganga, who is in Kigali for us. So, Ondiro, you've been following this closely. What is the bone of contention with this housing levy, and how does that tie to the rest of the Kenyan economy? We were just talking to Colleen about Kenya.
Jen, so the government needs to raise revenue through this levy to be able to implement their affordable housing project. The government says there's a housing deficit of 2 million units in Kenya, and so this project will be able to turn out 200,000 units every year. And for 5 years, that will be 1 million, and at the end of 10 years, that will be 2 million units. To be able to do this, they introduced a 1.5 levy on employers and another 1.5 on employees, and that's where labor unions come in and the contention begins. Because these labor unions are saying that this new levy is increasing the cost of doing business on top of an already tough business environment. Kenya is grappling with high energy costs. They're struggling with a weak currency that has only begun showing some form of recovery against the dollar due to subdued dollar demand, and also more taxes. And the levy is on top of other taxes that the government is trying to use to raise $1.2 billion this fiscal year. And this, as investors are very jittery about Kenya's debt burden and ability to pay back the $2 billion Eurobond that is due this year in June. And that's where Kenya went to the IMF, where they got a $938 million bailout with $682 million available this January. But the IMF comes with conditionalities, more taxes, removal of subsidies, and tighter monetary policy stance, thus toughening an already tough business environment.
And Ndira, we also know that's been having an effect on the Kenyan shilling, of course. Let's pivot to the other big story that we've been following in Kenya, which is also this deployment of forces to Haiti. I mean, can you just give us a sense of the significance of this for the audience?
The significance is that Kenya is the lead mission for the Peace and Stability Project by the UN in Haiti, and the court has dealt them a blow because they're saying that this deployment was not done within the confines of the law. The court says that there are questions with regards to the legality of this deployment, and it says that for it to happen, Haiti, which should be a reciprocating country, needs to send a formal request to Kenya, then Kenya can approve and make the deployment. So because of this court judgment, the government spokesperson said that they're going to appeal. But it's important to know that President William Ruto has been very vocal against the judiciary locally, but on the international platform, he's very mild about it, saying they're going to abide by the law. So this just means that they're hoping that they win the appeal, but if they don't, they have to go back to the drawing board and find a way of making the deployment within the confines of the law, because it's a very important mission.
Thanks so much, Ndiro, for that update. We've been following that closely. Now let's pivot over to Lagos. We have our reporter Anthony Osei-Brown standing by. Now this is a story we've been following closely. A refinery owned by Nigeria's richest man began operations in January and is reportedly beginning gasoline productions. The refinery has been described as a, quote, game changer and could help the country end costly fuel imports, many of them coming from the U.S. So, Anthony, just walk us through the significance of this Dangote Refinery. This has been years in the making. Is this the right time to have an impact on this Nigerian economy?
Yeah, I think it's just the right time. It's a 650,000 barrel capacity refinery, and they just started receiving crude in December, and I think receiving more crude this January. Is expected to start production or has started production, and the first products are supposed to hit the market by the end of the year. Nigeria is looking forward to this refinery because it's basically going to stop its dependence on imported refined products, which the country, despite being the biggest crude producer in Africa, has been doing, can refine its crude. But with Dangote Refinery, it's hopefully going to, the Dangote Refinery has enough capacity to refine Nigeria's crude, to refine enough crude for Nigeria and also export. So basically about 60% of its products could be consumed locally, another 40% could be exported. And that will also mean earning dollar income for Nigeria at a time the country is struggling with its currency. And so any export income that it can earn will go a long way in helping strengthen its currency. And also with local buying from Dangote Refinery could also save it significant amounts of dollars, about 30% of its import bill on gasoline, which it has been doing for decades now.
Yeah. So then, Anthony, when are we expecting the first output from the refinery to hit the market?
Yeah, that's a bit dicey now. We're expecting that to happen by the end of this month or early next month. Dangote has already told the distributors that they are likely to see gasoline coming into the market by March. So we're hoping that by March, some of the products will be in the market. It's producing at 350,000. It's refining about half of its capacity currently. So we don't know how fast it will raise capacity to its full 650,000 barrel capacity.
There's a lot to pay attention to. Really appreciate all of you guys for joining us. Let's thanks to Ndiro Oganga in Kigali, Anthony Osei-Brown in Lagos, and of course here, Colleen Goko-Petzer in Johannesburg. Thank you all so much. All right, coming up, we're going to look at one NBA executive's quest to boost sports infrastructure and business across the continent. This is Bloomberg.
Kigali, the capital of Rwanda, is a bit of an outlier and something you might not expect. It's got one of the only large-capacity indoor sports arenas in the whole of Africa. That's something Masai Ujiri, president of the NBA's Toronto Raptors and the only African executive of a North American sports franchise, wants to see more of.
So much of what you're doing on the continent specifically is focused on infrastructure. Why is that? I mean, why is it so important to you?
There's very, very few courts and basketball places for people to play. If I mention Accra, Nairobi, Lagos, Abidjan, and even Johannesburg, there are no arenas. There's not one arena. We don't see sports as a business. We see it more as recreation. We have to start getting business people, we have to start getting presidents, we have to start getting people that are decision makers on the continent to think about infrastructure.
In 2003, Ujiri founded Giants of Africa with the hope of enriching the lives of youth through basketball. In 2021, the organization committed itself to building 100 basketball courts on the continent. And here in Kigali, Ujiri is touting the BK Arena's transformation into Zaria Court, a destination complete with restaurants and a hotel, as an example for the rest of the continent.
When I look at Scotiabank Arena, I look at LA Live, and I look at the hotels, the restaurants, the shops, this is what people want. All those things around those places create, like an atmosphere where people can grow. Yeah, and grow in a business sense.
Do you want to take Zaria Court outside of Rwanda?
100%.
Yeah,
100%. This was just the best template for us. Yeah, this set the tone, set the example.
If Zaria Court is going to be the template, architect Kunle Ndayame will be the one charged with bringing the best version of it to life.
Financing-wise, I mean, how do you make this happen?
We have investors that are putting in equity into the development, and we have our debts from a local bank here because they see the potential and the viability of the project, and this is an important part of development of sports, the business aspect and economic viability of it.
This is the 20th anniversary of G of A, and I saw you talking about how you're not looking back, you're looking forward. So Zaria, this is the first instance of it. When you look forward 5-10 years, I mean, what does the sports ecosystem infrastructure on the continent look like to you in a perfect world?
I'm envisioning talented players playing on the continent. Yeah, I'm envisioning leagues. The challenges are going to come from everywhere. We have to learn. How do we find success here as sports people?
All right, let's turn to the business of sport in Africa and hear from someone who literally wrote the book on the subject. Will Mbiakop, head of the African Sports and Creative Institute, outlines why investors should be looking at opportunities in the sector on the continent.
There's never been a better time to invest in sports, in Africa's sports industry. Never. So today, when you look at the numbers, 80% of the world population is sports fan. 5% is the average annual growth over the past 20 years of the world sports industry, and it's projected to be up to 5 to 9% over the next 5 years. So very sustainable and consistent growth ahead. We're looking at Africa, a 1.4 billion country, 1.4 billion people continent, and a median age of 19 years old. So a young population, the youth of the world is in Africa, a population that is hungry for sports consumption and sports practice. Lastly, a rising middle class. So Africa is really primed for success when you talk about sports industry.
But Will, I mean, the investment is really focused on the developed economies, developed leagues. We see time and time again, there's another headline about, private equity firm acquiring a new league. I mean, what's the business case here outside of what you just said? Why aren't we seeing these flows come to the continent then?
Well, I think that the people do understand that there is a massive potential. As I said, when we look at the future growth, by 2050, 1 human being out of 4 will be African. So I think our investors understand that, and we see a flow of investment all across the value chain of sports. That is in academy, talent development. Egyptian family Mansour invested over $100 million in the Right to Dream Academy. We look at infrastructure, $258 million invested in the Stade of Senegal football, $104 million invested in the Kigali Arena, and President Tshisekedi committed for the Kinshasa Arena in the DRC. So that's just to name a few. We're looking at merchandising as well. French corporation Decathlon has invested massively. But we look at authentic African success. I want to maybe name Navalayo Sambo of Kenya. Her brand, Endla Athletics, is an authentic African brand making major impact across the continent, but also in North America, which is today her largest market share.
But Will, what do you say to people who look at the stats and say Africa is still behind in terms of education and skills development, and maybe that's actually where public funds should be going towards instead of sports?
Yeah, I think we can't really look at it that way. I think what we want to look at it is from a holistic perspective. What we want to look at is how sports can be a catalyst for the entire continent economic growth, but also global influence. I think you mentioned earlier all those icons in sports, the Didier Drogba in football, Francis Ngannou, Joel Embiid, NBA MVP Joel Embiid, and people who for the past decades have been paving the way. I'm thinking of the great Dikembe Mutombo. All of those guys have helped Africa influence globally. In Africa, when we look at sports, sport is really a catalyst. And when we say catalyst, we're looking at AFCON, for example, where $1.5 billion have been invested, but investment is just not solely for football. It does include urbanization. It does include public health. It does include education. How through those massive mega events and also grassroots sports, how are we going to leverage those opportunities to make sure that we have an impact that just go beyond the football, the basketball pitch? That's how do we transform the day-to-day lives of Africans through this powerful and impactful vehicle that sport is.
What is the model that you think should work then, Will? Because in your book, you talk about the English Premier League, which is, of course, has a storied history, billions of dollars. But then you also talk about cricket in India. I mean, what is a model that could potentially be replicated across the continent? Or are there multiple models potentially?
No, it's a great question. Look, I don't think we want to replicate nothing in Africa. I think we want to come up with our own model. We're very creative, very innovative, and we're very resilient. In the book, we put the spotlight on 8 success stories, the winning formulas of Africa. And one thing that all those success stories have in common is resilience and is innovation. And lastly, understanding the game, understanding the market.
That was Will Mbiakop, head of the African Sports and Creativity Institute. Thanks to Will for that interview. All right, coming up, the IMF's chief economist tells us why South Africa's growth forecast has been slashed. That's next. This is Bloomberg. The IMF has raised its forecast for global growth this year, but it's warned of risks from wars and inflation.
We see a lot of resilience in a number of economies, in the US, in China, and in many large emerging market economies, Brazil, India, Southeast Asian economies, Russia. So all of this together, that's what is lifting the growth number for this year. Behind this, what we see is we see strong demand in some countries, private consumption, public consumption, but we also see supply-side forces. We see the unwinding of remaining supply chains restrictions. We see energy prices coming down, and we see a lot of strength in labor markets.
I also spoke to the IMF's chief economist about their outlook for the continent of Africa. Pierre-Olivier Garinchas told me why South Africa's growth estimate has been almost halved.
We were expecting in October 1.8% for 2024. Now we're only expecting 1%. And what's behind this really chiefly is all of the disruptions we've seen in the energy sector and also in logistics, in transportation, freight, and ports.
In South Africa.
In South Africa. Okay. And so that's clearly one thing that is first order. That needs to be addressed. That is something that the energy and logistics crisis need to be. We need to find a solution, and that will be sort of the basis upon which we can have growth enhancing reforms coming down subsequently. So I think that's the first item of business. Another concern in the case of South Africa is, the debt level, public debt level, has been rising quite significantly over the last 15 plus years, and that's something that is creating vulnerabilities for South Africa. And so we also recommend, we were talking about the need for fiscal consolidation for South Africa. There is a need also to bring public spending under control and to raise tax revenues.
But it's unlikely that we're going to get that in the first half of the year. And I mean, you mentioned tax revenues. A country like Kenya is seeing the repercussions of raising taxes. Civilians are protesting across Europe as well. I mean, what's the likelihood we're going to see anything in the first half?
It's difficult. It's difficult, and it has to be done in a way, and that's what we emphasize also at the fund, that protects vulnerable. I mean, it's obviously when you raise taxes or when you cut some spending, and some of that spending may be going to the most vulnerable in society, we have to be very careful. So this has to be part of packages that are well designed.
That was IMF Chief Economist Pierre-Olivier Garinchas speaking with me there. Let's bring in Bloomberg's Africa economist Yvonne Mango, who is here on set with me. So, Yvonne, we heard a little bit there from the IMF Chief Economist about South Africa, but let's just branch out to Sub-Saharan Africa more particularly, because you were looking at the revision down. I mean, how are you dissecting this information that we got?
Okay. So we have seen a revision down to 3.8% for Sub-Saharan's growth from 4% previously. The main reason is the big economies in the region aren't doing well. Just to give context, South Africa and Nigeria account for 40% of GDP in the region. So if they underperform, that has significant implications for our growth outlook. As you saw the IMF chief economist mention, growth has been halved in terms of the growth projection for South Africa. Nigeria is expected to grow at around 3%, but that's still significantly below its long-term average of around 6%.
So then, what does this mean sort of going forward? How are you thinking about maybe the themes about what's going to shape growth in this part of the world?
Okay. If we can unpack South Africa more in terms of why growth has been halved, we've been dealing with an ongoing power crisis, as you're well aware, but more recently it's now logistics that's having an implications on the growth. We had manufacturing PMI come out yesterday showing that the inventory index in particular had dropped, and that was due to the fact that manufacturers aren't able to get their imported inputs in. So that's that's having significant implications on activity and growth. With regards to the themes for the continent, I think the main ones were debt. I think the chief economist touched on that in terms of fiscal consolidation. It's not just a South African issue, it's something affecting the rest of the continent. The two other themes for South Africa we had were power constraints, which I mentioned initially. Of course, we have elections this year. That has implications as well on the outlook going forward. And in Nigeria, particular currency reforms.
Well, and we were talking to Anthony a little bit, too, about oil potentially and its potential impact on the economy. I mean, does Nigeria and South Africa, do they need to really experience a turnaround to see growth in sub-Saharan Africa?
Absolutely. Nigeria in particular, oil production is significantly below where it potentially should be. So just an improvement in that regard would significantly help improve Nigeria's numbers.
When do we think we'll actually see some improvement for sub-Saharan African growth? When are you anticipating?
So we are expecting growth to continue to tick up. So next year, 4.1% is expected for the region, and that's as new power supply comes into South Africa and as we start to see the fruits of the reforms in Nigeria.
All right, we're going to have to leave it there. Bloomberg's Africa economist Yvonne Mango, always following these stories and more for us. Really appreciate your time, Yvonne. All right, and that is all the time we have for today. Join us again next month, the first Friday of every month. From me, Jennifer Zapasaja in Johannesburg, it is goodbye for now, but we'll see you next time.